Oh man, I just got the text, the market's getting ready to drop. No! Imagine getting a text message or somebody coming to your door, maybe tapping you on the shoulder or slapping you across the face, letting you know that it's time to sell. It's time to get out. Ow, can you just tap me on the shoulder? That it's time to get all of your money out of the stock market, move it into cash, to put it underneath your mattress or bury it outside in the backyard, wherever you want to put it. Wouldn't it be nice if somebody or something would give you that heads up notice? Well, turns out it may have just happened because one of the wealthiest investors in the world, one of the most respected investors in the world, just shared that his indicator is saying that it's time to sell. What is this indicator and who's talking about it? We're gonna find out more right now. What's going on, y'all? Welcome back to Wealth Hacker Labs. I'm your gracious host, Jeff Rose. Let's go ahead and dive right into it. So right now, we've got a lot on our brains. We're still quarantined. We are still trying to figure out when we're going back to work, when we can be a part of civilization again. Still waiting for our $1,200 economic stimulus check to hit our mailbox. And all that craziness going on, we still have to worry about what's going on with our investments, what's going on with our 401ks, our IRAs, all of our mutual funds. Well, right now, there is a lot to be concerned with, and maybe just to add some more concern, or at least have some clarity or some more information so that you know what you should do. Warren Buffett just shared that his most favorite stock market indicator just reached a level that is causing him some concern, because this is the same indicator that happened right before the 2000-2001 bear market, again in 2007-2008, and guess what? It just hit its highest level ever, and that's why he is concerned. So what is this indicator? Let's go ahead and dive into the computer so we can take a look. So according to this Business Insider article, Warren Buffett's favorite stock market indicator hits a record high, signaling a crash could coming. Now, yes, there are all these different indicators, all these different metrics that could show that a bear market is happening or getting ready to happen or getting ready to have a sell-off. But this one does carry some weight. So what exactly is this indicator, as they refer to as the Buffett Indicator? Well, this Buffett Indicator, initially, he actually talked about this back in 2001. It was a Fortune magazine article. I was able to go through the magazine and I found where he was talking about what this indicator is. And essentially all this indicator is looking at the Wilshire 5000. So this is the top 5,000 US stocks. So the calculation that you use is that you take the combined total market cap of all the country's publicly traded stocks, and then you divide that by the quarterly gross domestic product, or the GDP. And once you do that calculation, if that number is greater than 1, then that's where there is a cause of concern. So looking here on the computer, you can see, so this is the graph. This is the chart showing the Buffett Indicator, or the Wilshire 5000 divided by the quarterly GDP. So the number that he's looking at is when this hits 1 or greater than 1, then that is a cause of concern. So back in 2000, 2000, it was 1.18. Back in 2008, 2007, it just barely over 1 at 1.01. And here's where it gets really scary, because this is where it's at right now, 1.26. So we are that much greater than, almost 10 basis points larger than we were back in 2000. Is this thing foolproof? Not necessarily. And this article points out what are some of the discrepancies, or what are the things that this Buffett indicator doesn't include. So this indicator does have its flaws, as this article points out, and it says including GDP, not counting income earned overseas. So obviously we're taking the revenue from the top 5,000 US companies, but we're not factoring any income, any revenue that's generated outside of our country. Most countries nowadays are global, so we have substantial income that's coming in not just from within our country. And the other flaw is that we have US listed companies that are a part of this calculation that may not be contributing much to the US economy, because most of their business is done overseas. So those are just a few of the flaws, but as Buffett pointed out, this is back in 2001, nearly 2 years ago. the ratio rose to an unprecedented level. This should have been a very strong warning signal. So this is going back. He didn't say this yesterday. He's going back and saying like, this is what happened in the past. Buffett was saying this back in 2001, whenever it hit 1.18, which at that point in time, he said was an unprecedented level. Well, if he said that back then and we are at 1.26, then I don't know, is that unprecedented like 2.0? Whatever that may be. Now, so is Buffett the know-all, tell-all when it comes to stock market indicators? Obviously, he's done an amazing job. He's got a lot of experience, done very well. Now, the next person I'm going to mention, I'm not saying that he is an expert. He is more of a TV personality, but I did find it interesting when I was doing research on this Buffett indicator. I also came across this by one of our favorites, Jim Cramer. Now, I don't hate Jim Cramer. He just, I gotta like get my sleeves all rolled up and get going. But he also has an indicator, which he refers to as that's not the name that he gave it to, but it's actually is what it's called, the S&P short range oscillator. And right now, Jim is saying that it's at 7.2%.
Well, I think we might have found out today. It looks like 30 million. Yep, just as we learned that we had the best rally since January of 1987, an admittedly inauspicious year, but not until the fall. And COVID cases increased by just 1.2%. That's the slowest pace this month. We also got some incredibly bad news.
Now, one thing worth pointing out regarding Jim Cramer and his S&P short range oscillator, back in October of last year, he was saying the same thing. His favorite indicator isn't down enough for me to turn positive. So this is what Jim was saying back in October. So this is when the Dow was at 27,000, and then we saw another 2,000 point increase up until what happened. Now, none of that factored in coronavirus and what's happening in our country, having to shut everything down, but it's just showing that any indicator isn't going to have a 100% track record. But still, we have this indicator that's showing that stocks are overvalued. We have the Buffett indicator showing that stocks are overvalued. When I pulled up a chart of the S&P 500 going back, about the same chart history as the Buffett indicator. So we have this indicator here, and you can see the chart going here, and then we go to the S&P. So all the parts in gray there are when we had a drop, a significant drop, going back to 71, 73, 74, 81, 84, and then recent day. And if you kind of compare that to here, like here's where you can see, so going back in the 80s, this is where the indicator didn't really play off all that well. It wasn't really until the last 20 years or so where the indicator has been fairly spot on. So has it been adjusted just for global expansion with companies now, with corporations, where a lot of that revenue is generated overseas, and maybe the fact that doesn't factor in is why we're seeing this at unprecedented levels. It's really hard to say looking at these numbers compared to the past. This is one of those indicators that adds, I think, a little bit more reality to the situation. We closed out April, one of the best markets that we've had in years, and yet we're doing that when unemployment is at record levels with no sign that that's going down anytime soon. We've not, earnings haven't still come out, and yet the market continues to go up. So I think this is showing a truer representation, not saying that we're getting ready to see another sell-off, but just call me the pessimist. I feel like I'm being a realist like the Buffett indicator or the S&P short-term oscillator, in that the market cannot continue to go up when earnings continue to struggle, when we have so much uncertainty how companies are going to play out, how businesses are going to survive through this global crisis, through this pandemic. So I think that is more the reality, and I think these indicators do give a truer representation of what is going on. So does that mean that you need to panic and truly just get out of the stock market altogether? If you are closer to retirement and you haven't made those moves yet, then I would encourage you to definitely go more conservative. If you are younger and you still have time on your side, then I wouldn't freak out. Maybe you go a little bit more conservative, but in the event that it doesn't play out, you still want to have some in stocks, some in equities, so that if we continue to have a run and you just aren't able to time the market, because you never can, then you don't want to miss out on any further uprisings in the market. You don't want to miss out on those big days, and a lot of people sold out prematurely, missed out, and that's what we've experienced here lately. I'm curious to hear your thoughts. What do you think about the Buffett indicator? Do you think that we are getting ready to see another major sell-off? Let me know in the comments below. Also too, if you haven't seen this yet, currently I'm doing a fundraiser here on the channel, wanting to give more resources, more funding to first responders, to the doctors and the nurses that are putting themselves on the front lines, helping people dealing with COVID-19 and coronavirus, and just make sure that they have the life-saving medical resources that they need. So that's direct relief. You can see it on the sidebar there on the channel. Anything that you want to give, big or small, is greatly appreciated. All of this is going 100% to direct relief. None of this is coming to me. I don't need it. I want to just make sure that people are taken care of, especially the ones that are taking care of others, putting others first and their safety before themselves. I mean, I just mad respect to all the doctors, all the nurses, anybody that's a first responder that's just doing their part, trying to help out. So if you feel like giving, I would greatly appreciate it. I know that they would greatly appreciate it. All right, y'all, this is Jeff Rose reminding you that it's your money, it's your life, and only you can make it awesome. Until next time, peace.